What's up, guys? This is Manoj Papani. I welcome you all on behalf of the Edupedia world. Let's mark the beginning of this last presentation for the Insurance Act 1938, in which I'm going to cover the remaining few topics with you. So, are you guys all set? Can we hear the cheers for you? That fasten up your seatbelts. We're about to take off with the first topic of the day, and that will be compensation to be given to the acquired insurer. This thing has been mentioned under section 52J of the Insurance Act 1938. So, guys, in my last presentation, my last topic was about the acquire of the undertaking. So, the central government may acquire if it is satisfied with a few things that are already been covered in my last presentation. If it acquires that undertaking of the insurer, so what will be the following procedures to that? In this presentation, in my first topic, I'm going to tell you about that compensation which is required to be given to the acquired insurer if in case central government acquires the undertaking of the insurer. So in my last part, I just covered about which will go to happen in that particular state. But now I'll talk about the compensation part. What amount of compensation will the acquired insurer be eligible to receive as per section 52J? So are you guys all set? Perfect. Number one, determination of compensation by central government. So, since central government is the one who has acquired the undertaking, so it is always the central government who is going to decide, okay, what amount should be given as a compensation. But having said that, definitely authority, that is IRDA, it is going to provide a consultation as far as the compensation amount is concerned to central government. So central government is going to take up this measure of providing or for the compensation amount. They'll take up only if in case they consult with the IRDA, that is the authority, and then they are going to determine the compensation which will happen. So determination of compensation by central government, it has been covered under section 52J subsection 1. It says that the acquired insurer shall be given by central government such compensation in respect of the transfer of undertaking of the acquired insurer as is determined in accordance with the principles contained in 8th schedule. So this is something which has been mentioned in the Insurance Act 1938. So central government is the power authority wherein they can determine the amount of compensation which is required to be paid to the acquired insurer. But having said that, section 52J subsection 2 simply says that compensation to be determined in consultation with the authority, just like I told you of. So the amount of compensation to be given in accordance with the principles of contained in 8th schedule, that is something which is primarily available amongst many of the schedules relating to the Insurance Act 1938. So 8th schedule is the one wherein you can compute the compensation part. So the amount of compensation to be given shall be determined in the first instance by central government. However, that has to be done in consultation with the authority, that is IRDA, and shall be offered by it to the acquired insurer in full satisfaction thereof. So determination will be done in first instance by central government, and this compensation will be determined in consultation with the authority, that is IRDA. Both these things have been mentioned under section 52J subsection 1 and 2 respectively. Now, if in case you are the acquired insurer and you have a thought in your mind that I should have got 1 crore rupees. For an example, I should have got 1 crore rupees and they have just provided me 80 lakh, and you are not satisfied with the kind of amount they have provided you in consideration, in compensation. So definitely you need to have that kind of access wherein you can demand the renegotiation part or redetermination of that compensation. Obviously that should be your right. This is the same thing which law also understands. So this thing has been mentioned under section 52J subsection 3. If the amount of compensation offered in terms of subsection 2 is not acceptable to the acquired insurer, then he may request central government in writing. He may request central government in writing to have the matters referred to the tribunal, and then tribunal is going to decide the amount of compensation. That will be the finality of determination of compensation. This thing will be covered under section 52J subsection 4. So if before the date which is notified under subsection 3, central government does not receive the request, let's suppose you are satisfied with the compensation amount and you don't provide for any of the requests to the central government for increasing your compensation. Then in that case, the matter is over and out at that particular instance itself. So final compensation which is made by the central government is acceptable to you. So no point of discussing the matter thereof. But if in case you refer the matter, okay, again, and you request in writing to the central government to have your matter referred to the tribunal, then the amount of compensation that will be offered, okay, by the tribunal, the amount determined by it, shall be the compensation payable under subsection 1 and shall be binding and final on all the parties concerned. That will be the final compensation that is fixed by tribunal. So if before the date notified by under section 3, central government does not receive any request as provided in that subsection, the amount offered, number 1, or where in case the reference has been made to the tribunal and the amount is determined by it on it shall be the compensation payable, then in that case that will be the amount which will be final and binding on the parties concerned. Number 1 is a simple case wherein you don't go for any of the renegotiation part, you don't request to the central government in writing. So that is the price which has been like fixed by the central government itself. That's the final price, final binding price. But if in case you go for an option of appealing to the tribunal, okay, and providing them an opportunity to renegotiate or redetermine your compensation. So whatever the compensation that will be fixed by the tribunal, that will be final and binding on all the parties concerned. This thing was covered under section 52J, which talks about compensation to be given to the acquired insurer. It talks about the determination of the compensation by central government. The compensation has to be determined in consultation with the authority. If in case renegotiation needs to be done, then you need to request in writing to the central government to have your matter referred towards the tribunal, and the whatever the kind of compensation which is being fixed by the tribunal shall be final and binding on all the parties thereof. This thing has been covered under section 54J, subsection 4. I hope you guys got the complete clarity with respect to each and every provision that I made you understand over here. Let's move towards the next topic. So, it talks about no risk to be assumed unless premium is received in advance. This thing has been covered under section 64 VB. So guys, this particular provision, what does it say? Let's understand it. Number 1, no risk to be assumed unless premium received in prescribed manner. This thing has been like quoted under section 64 VB subsection 1. No insurer shall assume any risk in respect of any insurance business unless and until the premium payable is received by him or is guaranteed to be paid by such person in such manner and within such time as may be prescribed, or unless and until deposit of such amount may be prescribed is made in advance in the prescribed manner. So unless you pay any of your premium, or the same thing has been guaranteed and paid by such person in such manner in such time, or your deposit of such amount as may be prescribed has been like made available in advance, then only risk of your indemnity, risk of bearing your indemnity and any other thing can be assumed by the insurer, that is the insurance company. This thing has been mentioned under section 64 VB subsection 1. Now, what should be the date of assuming risk? The next point. This is an explanation to section 64 VB subsection 2. What should be the date of assuming risk? So the risk may be assumed not earlier than the date on which premium has been paid in cash or by check to the insurer, and where the premium is tendered by postal money order or check sent by post, then the risk may be assumed on the date on which the money ordered is booked or check is posted, as the case may be. So if you are paying out cash or check in hand, then risk can be assumed on that same day, not before that. Okay, not before that, but on the same day or maybe after that. And if in case you are providing the premium amount through postal money order or check by post, then it can be assumed on the day on which money order was booked from your end and check was posted. So that will be the date of assuming risk. This thing has been mentioned as an explanation to section 64 VB subsection 2. Now, moving on to the refund. Refund to be made directly to the insured and not to the agent. Let's suppose any kind of refund of that premium becomes due, okay, and the insurance company wants now to refund that amount to you. So are they going to approach your agent with whom you did the transaction first of all, or are they going to get in touch with you directly in order to ensure that the refund amount gets in your pocket. Obviously, it should be their prerogative wherein they should try to refund. They shall basically not just try, they shall refund the amount directly to you as an insured and not to the agent. This thing has been mentioned under section 64 VB subsection 3. So any refund on the premium which may become due to an insured on account of maybe cancellation of policy or alteration in any terms and agreement and conditions, then that shall be paid by the insurer directly to the insured by a crossed or ordered check or by postal money order, and a proper receipt shall be maintained and obtained by the insurer from the insured, and such refund shall in no case be credited to the account of agent. In no case you're going to credit the amount of refund to the agent's account. I hope I'm pretty much clear with each and every kind of word that I uttered and made you understand over here. So refund shall be made directly to the insured and not to the agent. This thing has been mentioned under section 64 BV subsection 3. Now, moving on to the last part of this section. Duty of agent to deposit the premium with the insurer within 24 hours. Many of the agents, guys, come across and interact with you. Okay, you get to know many of the people who are insurance agents. Usually what happens is they sell out to you the policies of their insurance company. Okay, and in consideration of that, you pay a premium check to them, premium cash or premium check in hand to them. Okay, so at the time they avail that particular check or cash from your hand into their hand, okay, it becomes a duty, it becomes a responsibility of the agent to deposit that same premium with the insurance company within the next 24 hours. This thing has been like mentioned under 64B, BB and subsection 4. So, where the insurance agent collects the premium on the policy of insurance on behalf of the insurer, he or she shall deposit with or dispatch by post to the insurer the premium so collected in full. The premium so collected in full, not partly. That has to be the premium so collected in full without deduction of his commission. He is just not authorized to deduct his commission and then pay the balance to the insurance company. He needs to pay that full amount, and after receiving the same, the insurance company is going to put in his bank or wallet the amount of his commission, but he is not supposed to deduct his commission first of all. So he shall be required to pay the premium so collected in full without deduction of his commission within the next 24 hours collection, excluding any bank or postal holidays. So this is the duty of agent. I hope I am clear with each and in every kind of provision that I made you understand over here. Perfect, guys. Let's move towards the next topic. This will be about the restrictions on the opening of a new place of business. This thing has been mentioned under section 64 VC. So guys, this particular section talks about the kind of restrictions that the insurer will face on opening up of any of the new place of business. Okay, so why these restrictions have been imposed on them, okay, you'll get to know once you have the kind of briefing with respect to all these subsections. Number 1, opening of a new place of business and change of a new place of business. This thing will be covered under section 64 VC subsection 1. And permission may be granted subject to some of the conditions. This thing has been provided for in subsection 2 of section 64 VC. Now, what does it say basically? So it simply says that no insurer shall open a new place of business in India or change otherwise than within the same city, town or village the location of an existing place of business situated in India without obtaining the prior permission of authority. Okay, you may do so, you may change your place of business, okay, but you'll have to take the prior permission of IRDA. Though if in case you want to shift from same city, okay, within that same city, you're working out in Delhi, you're working out in East Delhi and you want to shift from East Delhi to West Delhi, your place of business, then you can do so. Okay, if you wish to work out in the same village, town or maybe city, then in that case you can open up a new place of business in India over there. But if in case you want to change your location from your existing place of business situated in India to another place in India, apart from being in the same city, town or village, okay, then in that case you need to obtain the prior permission of authority, that is IRDA. This is something which has like expressly been provided in the act itself. But having said that, permission can be granted subject to conditions. So the authority has got the complete kind of power that they may grant permission under subsection 1, subject to such conditions as they may think fit, in order to impose either generally or with reference to any of the particular case. So they are free to have that permission done only in case which are subject to some of the conditions. So then, since this is something which has been like expressly provided in the act itself, so it talks about some of the restrictions on opening up of any of the place of business. This thing has been like covered under section 64 VC, and I hope that you guys got the complete clarity with respect to what kind of permission that you need to take up while you change up any of your place of business from one city to another city, one village to another village, or anywhere around, apart from relocating from within same city, same village, or same town. You need to have that permission of the authority, that is IRDA, and they may provide you the permission subject to some of the conditions as they may think fit. With this, let's move towards the next topic of the presentation, and that will be reinsurance with Indian reinsurers. This thing has been covered under section 101A. Basically, this particular section basically promotes brotherhood. Okay, the sense of feeling of brotherhood amongst different insurers in the country. Okay, so Aviva Insurance is going to take care of Oriental. Oriental is going to take care of United Health. United Health is going to take care of LIC. So this basically forms a feeling of brotherhood. Okay, so why it is usually being called over here? Because reinsurance is something which is extremely important, and this section basically frames up a kind of a scenario wherein reinsurance should be done with Indian reinsurance only. Okay, insurers only. So this thing promotes this thing that the entire money, the entire premium amount, the entire stuff going to remain in India itself. Okay, so that is why it is being made mandatory on all the reinsurers to reinsure any of your stuff or business along with the Indian reinsurers only. This is something which has been like expressly provided under section 101A subsection 1. So it says that every insurer shall reinsure with Indian reinsurers such percentage of the sum assured of each policy as may be specified by IRDA with the previous approval of central government. It simply says that whatever the kind of percentage which is being fixed by the IRDA, they'll have the previous approval of central government first of all, and they'll ask each and every kind of insurer, okay, that they should reinsure only and only with Indian reinsurers such percentage of the sum assured whichever being specified by the authority. This is something because they want that only the entire segment of Indian insurance business should grow. And if there are persons who have been like MNCs who have come into India from outside, so they should basically think about on these lines that they need to reinsure only with Indian reinsurers in order to ensure that each and every kind of money and exchange remains in India itself. Next is the percentage of sum assured to be reinsured to be specified by the authority. So what will be that percentage? That percentage of the sum assured, okay, that needs to be reinsured, that will be specified by the IRDA. Okay, this thing has been mentioned under section 101A subsection 2. So they have simply kept it in a very simple way that the maximum that can be done as a percentage of sum assured of reinsured insurance will be 30%, maximum 30% of the sum insured. So the authority may, by notification in the official gazette, specify the percentage of sum assured on each policy to be reinsured, and different percentages may be specified for different classes of insurance. However, no percentage so specified shall exceed 30% of the sum assured on such policy. So even they know about this thing that that will be like undue hardship with any of the assessee or any of the insurer in that case. If they'll ask them to minimum have some of the sum assured, so that is going to be an undue hardship with them because they won't be able to extract the best of the benefit in terms of premium and their revenues, because they are something doing it for the sake of Indian reinsurers that the authority is imposing on them, that they need to mandatorily reinsure their reinsurance business only with Indian reinsurers. So that is something which they kept it as percentage, which is maximum 30%. Apart from that, all the kind of sum assured on that particular premium, that will be yours. So you don't need to go beyond 30% in that case. Having said that, They've also framed another opinion, okay, about the consultation with advisory committee. So no notification under subsection 2 shall be issued except after consultation with the advisory committee. So advisory committee is going to provide them the kind of figures, okay, we should invest or we should have the insured insurance for this amount of assurance. So sum assured will be like, maybe they can fix up 20%, 25%, 22%. That will be depending on the consultation with the advisory committee. But the maximum could go up to 30%. And lastly, about the option of insurer to reinsure a higher percentage. Let's suppose me being an insurer, I myself am saying that, okay, I want to reinsure my business with a higher percentage of sum assured. So I should be doing that, right? So for the removal of all the doubts, it is hereby declared that nothing contained under subsection 1 shall be construed as preventing an insurer from reinsuring the entire sum insured or on a policy or any proportion thereof in excess of the percentages specified under subsection 2. So they have got an option. Insurer has the complete authority that if in case they want and they wish to reinsure a higher percentage of sum insured, they may do so. Okay, so it's just clear out that the act is just not preventing or construing any of the insurer from reinvesting or reinsuring at a higher amount. So there's no problem like that. This section was talking about reinsurance with Indian reinsurers. The provisions are contained under section 101A. It talks about the mandatoriness to reinsure with Indian reinsurers, the percentage of sum assured to be reinsured with prior permission of authority, that is maximum 30% of the sum assured. And before doing that, you need to have the consultation done with advisory committee. And finally, having said that, you don't exercise any of the option wherein you would be stopped. So you can avail any of the option with respect to insuring and reinsuring a higher percentage of the sum assured. So you may wish to, you can. So there is no problem in that particular case. This thing was contained in section 101A subsection 7. I hope you guys are clear with each and every kind of concept relating to reinsurer with reinsurers as well. Perfect, guys. Let's move to the last segment of this, the Insurance Act 1938. So this will be the examination of reinsurance treaties. This thing has been contained and covered under section 101C of the Insurance Act 1938. So it speaks about the right, okay, the kind of authority's right, okay, with respect to the examination of any of the reinsurance treaties. So IRDA may, at any point of time, they can call upon the insurer to submit for his examination at the principal place of business of the insurer all the reinsurance contracts that have been entered by the reinsurer. They can call upon all the reinsurance contracts entered into by the reinsurer. They may, whenever they wish to. Number 2, they may at any point of time examine any officer of the insurer on oath in relation to any of the such document. They might be finding any of the discrepancy with relating to any of the documents. So they might examine any of the officer of the insurer on oath in relation to any of such document. Finally, they may at any point of time by notice in writing require any insurer to supply him with a copy of any of these documents. So they might be in a case wherein they provide by notice in writing that they want such copies of these documents. I'll be concluding my video with a dose of motivation, and that will be, there is always something to be thankful for. I'll say thank you on behalf of the Edupedia world. Keep interacting via questions, queries in YouTube comment boxes. I will love to solve each and every kind of query or demands that you have with me. Perfect. I'll see you in the next presentation. Till then, stay connected. Love you all. God bless you. Take care. Bye. Sayonara.